CAT8
is a group of Jain individuals and professionals
who are assisting the community at large
during the COVID-19 crisis.
CAT8 began just before the COVID-19 crisis,
when it held a can challenge,
where children created iconic monuments
using cans of food. It raised some 3 tons of canned food,
enough supplies for 4 months.
For the Watford Food Bank,
run by the Trussell Trust.
During the COVID-19 crisis,
CAT8 is helping the elderly, the vulnerable,
those with isolation and key workers,
with meals and essential shopping,
help with medicine collection,
and someone to talk to,
whilst coping with isolation.
CAT8 is organising webinars,
imparting information and creating awareness.
A range of topics for all age groups.
In addition, we have created
a business and education helpline
for individuals and businesses
that need further guidance
on the topics of all the webinars.
We also have a YouTube channel,
a Facebook page and a Twitter handle.
CAT8 is a newest network fibre,
connecting the community.
We are also very kindly and generously supported by a number of businesses to enable us to carry out our work. Hello, everybody. Good evening. Welcome to the CAT8 webinar entitled Brexit and VAT 2021. I hope you're all keeping safe. Now that Brexit has obviously happened on the 31st of December 2020, we thought it would be a great idea to provide information to everyone about what this entails from a VAT perspective. So before we start, I have a few housekeeping points which I would like to run through, if I may. Please ensure that your mute button is on at all times. Also, if you can keep your video camera off. The format of the webinar will be a presentation followed by a question and answer session. If you have any questions, please send your question using the chat box at the bottom of your screen. Nirmal, Shandip, and I will be moderating and will pass the questions on to the panel. Please note that the content of the webinar is for information purposes only, and any information given today may change. This webinar is being recorded and we will be putting it on our Facebook page and our YouTube page. As I said before, tonight's topic is Brexit and VAT 2021. Our speaker tonight is Jaspal Dhillon, who is the VAT Director at Lubbock Fine. He is a chartered tax advisor and a member of the VAT Practitioners Group. Jazz, short for Jaspal, has joined the Lubbock Fine team in May 2017 from one of the big 4 accountancy firms as a senior VAT manager. Prior to joining the big 4, he had worked for other mid-tier accountancy firms, having started his career in VAT some time ago at what was then known as Her Majesty's Customs and Excise, where he trained as a VAT inspector. He has a broad range of experience in VAT and has worked with clients of various sizes, operating in a wide range of industries. In particular, he enjoys advising on VAT issues surrounding real estate and the international supply of goods and services. Jazz is also a keen Chelsea supporter. So over to you, Jazz.
Thanks, Remit. That's great. Thank you for the introduction.
Okay,
I need to share
stop
my
share.
screen.
I'm just stop sharing. Yeah, carry
So I
on.
need to share my screen now. I think it's that one. Share. Right, can everybody see my screen? Remit, can you see my screen?
Yep, that's fine. Just put it to slideshow and you'll be fine.
Oh yes, slideshow. Yep,
Just go to the top bar. It's not. If you go to the top bar,
yeah,
you'll see that little squiggly after autosave on the right, the screen thing. Just click on that and you'll be getting the full.
See,
that's it.
You taught me this earlier, Remit, and I've already forgotten it already.
Jaspal, you'll have to speak up, please.
Okay,
yes, please.
Can everybody hear me?
Yep.
Is that better?
Yeah, it is.
Okay,
good.
Great. Okay, so well, good evening, everybody, and welcome to this presentation on VAT and Brexit in conjunction with Lubbock Fine and CAT8, who we are at Lubbock Fine very pleased to be working with all the good causes that they do, as could be seen from the previous two videos. So I'm going to talk about Brexit and VAT in particular because that's what I specialise in. Just before we move on, as was on the original screen share at the beginning, and also Remit mentioned it earlier as well about CAT8, is that the information in this presentation is purely for general information purposes. I wouldn't recommend that you take this information and interpret it and try to use that to without speaking to an advisor, and hopefully speak to somebody like me. And in fact, why not just come and speak to me? You'll get my details at the end anyway. So by way of an agenda, I'm going to speak about Brexit generally, just a bit of a summary and its impact. I'm going to speak about the recent Christmas Eve Brexit deal that the UK government was able to secure. And then we're going to speak about mainly, and this is going to be the lion's share of the presentation, the impact that Brexit's going to have on VAT, on goods, and then on services. The reason for that is because, as I'm sure a lot of you may or may not know, that with VAT, the rules for VAT depend on whether the supply you're making is of goods, i.e. tangible things, or services, intangible things that you sell. And then we'll also, towards the end, I'm sure we'll still have time, speak a little bit about Northern Ireland, which is, if VAT wasn't specialist enough, VAT in Northern Ireland is quite an area that is quite unique because of which we'll get to, because of the need to maintain a frictionless border between Ireland, which is in the European Union, i.e. the Republic of Ireland, and Northern Ireland, which is still part of the United Kingdom. So to speak about Brexit in general terms, obviously the referendum was now 4.5 years ago, and then there would have been maybe a year or so, maybe 2 years before that, where Brexit was spoke about in the media and just generally. It's actually been something that's been around for quite a few years, thinking back throughout my life. When I was studying A-level politics back in the 90s, it was a big issue. The word Brexit, I don't think, had been invented back then, but it was still something that was always on the political agenda. And I remember the new Labour government back in the late 90s, and it was in the Labour manifesto to have a referendum, which they didn't fulfil or deliver on. And I think it's been in every party manifesto since then, but David Cameron finally did deliver on that back in 2016. And we had the referendum and we've left the European Union. That actually happened last year, but then we had an implementation period, which only went live literally 2 weeks ago tomorrow. So what does it mean? It means that we're basically, the UK now has sovereignty over its laws and policies. It's no longer bound by things like EU regulations and EU directives. The UK is now free to make its own decisions about policy and tax law, and it's also no longer bound by the case law of the ECJ, the European Courts of Justice, from the 1st of January. However, it's a bit more complex than that, in my view, and I think a lot of tax practitioners will say the same thing, in that the EU decisions will still be very influential, because, especially with regards to VAT, because essentially it's a tax that the UK implemented in 1973 as becoming part of the what was then the European community. So the previous ECJ decisions will still continue to have influence, and it's just my personal view. But I think even going forward um, into 2021 and beyond, decisions made by the European Courts of Justice will still be quite influential, um, with how we interpret retained EU law, because that's essentially what's happened when we left the European Union, and from the end of the implementation period, all of the EU law became enshrined, so to speak, into UK law, and that was needed for, well, for practical reasons, for the reasons of continuity. If we left the European Union, the implementation period ended on the 1st of January 2 weeks ago, and then all of the law that was standing behind that no longer applied, then we could potentially have anarchy. So quite rightly, everything has now become UK law, but it was law that was it's domestic law, which was basically derived from the European Union law. So I do think for time to come, there will still be especially transactions that happened before the 1st of January. But even going forward, I still think the UK government and UK courts, when interpreting the new UK legislation, will still probably look at the European Courts of Justice decisions, which won't be binding. They'll be more persuasive than binding. But what does it mean going forward? It basically means that the UK government can now make its own laws. It's not bound by UK EU regulations and directives. The UK courts can now have renewed interpretation of renewed interpretation of UK VAT law and other legislation. As an example, if there was which there has been, a ruling by the ECJ in 2010, which was 10 years ago, that said a certain financial service was exempt from VAT, can that now be challenged by taxpayers? I'd say it probably could be, to refocus on the UK law to see if we can interpret it differently. So I think we've probably got quite a lot of litigation ahead of us as tax practitioners and other people that work within tax law, lawyers, with regards to looking at and trying to establish what the new landscape is going to be like. I'm obviously very tax and VAT centric, but the exit from the European Union isn't just about tax and about VAT. It's about so many other things and areas of life. Obviously, the obvious one is the movement of people, which is, in some areas, that's what a lot of people think, that the reason that people did vote for Brexit, to stop the free movement of people. Cooperation, environmental policies, health and safety policies. Basically, it affects all areas of life, but I'll be forgiven for being a bit tax centric and focused on VAT, because that's what keeps a roof over my head. So, okay, so just to talk about the Christmas Eve deal, which is not even a month ago. So, the headline is that Boris Johnson, the UK government, have secured a deal with the European Union, and they have. But it's important to remember that that deal relates to tariff-free trading, really only, and not really much else. And it's also accompanied by some quite complex rules that refer to the rules of origin. So in order for goods to move between the European Union and the UK, or the UK and the European Union, free of any tariffs, the goods in question would have to have originated in either the UK or the European Union. Now, as an example, this is a real life example of a client that I'm working with at the moment, and we're working on their supply chain. Prior to Brexit, prior to the 1st of January, my client who sells tea bags and herbal teas and specialist teas, and also what can the best way to describe it is kitchen equipment, which is teapots and mugs and everything else. They moved their goods from Australia into a German warehouse, and from the German warehouse they would then sell those goods and tea bags and everything else. It's not just your PG tips, it's quite special stuff, and they would move that throughout the European Union. Now, we had a discussion about whether they were able to move their goods from the German warehouse, or continue to move their goods from the German warehouse tariff-free to their UK fulfillment house. And the answer basically to that is well, no. I mean, I'm not a customs specialist, I'm a VAT specialist, but I think based upon the rules of origin, because those goods have not been substantially altered to become originating from Germany, our European Union country, they've come from Australia, there will be tariffs on those goods. And so the headline, as I said, was tariff-free trading with the European Union, but I think it's a bit more complex than that because of these rules of origin. And with regards to VAT, I'm sure as many of you would have read in the media after Christmas Eve that the trade agreement was 1,200 pages long. I didn't read it. I got it up on my screen and I used the Control F function on my computer pad, and I searched for the word VAT. The word VAT came up in the document 550 times. But not really anywhere of any real significance. There was only one real section on VAT where there was talk about cooperation between the European Union and the United Kingdom in order to combat VAT fraud. So all of the VAT rules that I've been speaking about for the last 4 years are all there, and they're going to change. The deal makes no difference to that. So there's lots of changes with regards to VAT, and they're all live now and have been for the last 13 days, almost 14. So moving along in the agenda, as I said, we'll speak firstly about the supply of goods and the impact on the international supply of goods as a result of Brexit. Before I get into this, I just wanted to say that when you're thinking about VAT, it's really important to always remember the nature of what you're supplying. That's more to do with services, but also looking at the type of goods you're supplying, because they all have different VAT liabilities. And one of the key concepts which my old boss taught me about 15 years ago was you've always got to think about what, who, and where. What are you supplying? Who are you supplying it to? And where are you supplying it? Because that is what drives the VAT liability, especially with the international supply of goods and services. So if we look at pre 1st of January 2021, so prior to the implementation period, at the end of the implementation period, so a business moving goods to the EU from the UK and purchasing goods from the EU to be brought into the UK, there was obviously no customs duty, and in a way no VAT as well, because the VAT wasn't import VAT, it was something referred to as acquisition VAT, which is similar to VAT, but it's a self-accounting mechanism. And the reason that was that there was this free trade is because of being a member of the European Union and the free movement of goods within the European Union. So now we're on the at the 13th of January 2021. So now Brexit is up and running. So sales now of goods from the UK to the European Union are exports from the UK. They're not called dispatches, which they were if they're intra-EU movements, they're called exports. And it's free of UK VAT, it's zero rated. And that's whether the customer is in business or not. If the goods are leaving the UK, then they are free of UK VAT, which sounds on the face of it. I mean, just if we just stop there, that sounds great. It sounds really straightforward. Everything, all the goods you sell out of the UK are now zero rated, not subject to VAT. However, obviously, it's a lot more complicated than that, which I'll get to in a second. Purchases from the European Union are now imports into the UK. So you have import VAT that needs to be accounted for as the goods come into the UK, as opposed to acquisition tax, which you accounted for in your VAT return prior to the end of the transition period. You also may have duty where applicable. Obviously, we have the Christmas Eve trade agreement, but as I said, with my example of the sellers of the tea bags and the teapots from Australia, you may have duty at the border, and that needs to be considered. When you sell to the EU, however, even though it's a zero rated export from the UK, who is going to be the importer into the European Union? Is your customer going to import into the European Union? Or are you going to, as a UK seller, import into the European Union? Because if you are going to be a seller of goods from the UK and import those goods yourself into the European Union, you will need to then have a EU VAT registration. You will need to account for EU, i.e. the country of, let's say, France, French import VAT, and then you'll have to charge French VAT on a domestic sale. So it does create this, I mean, the VAT should, with most goods, flow all the way through, but it does create this more of a compliance burden, which obviously wasn't there before when we were members of the European Union. What's more complicated is sales to private EU individuals, because prior to the 1st of January, we had something called the distance selling threshold, where you could sell to private individuals in other European Union countries up to a certain threshold. Most countries, the threshold was €35,000. Our UK threshold is £70,000, which is quite generous compared to other European Union countries. But now you are going to need an overseas VAT registration, in order to bring VAT to account in other European Union countries. And this is an ever-changing landscape, because the EU Commission have been speaking since 2015 and implementing various changes to how EU VAT is going to operate, and moving the place of supply and where that needs to be accounted for. So as we go into 2021, with all being well, and we get through this COVID situation that we've been in now for over a year, for going on a year, and things move along smoothly, there's going to be lots of other changes at the EU Commission level that will just happen, and traders may not be aware of them. So it's always very important to stay in touch with your advisors. So some good news, I did mention just a second ago that when you're buying goods into the UK, you're now going to have to account for VAT as opposed to self-accounting for acquisition tax. As an easement, the UK government are allowing UK traders to self-account for the import VAT in their VAT return. It's referred to as postponed VAT accounting. So up until the 1st of January, if you imported goods into the UK, say you imported £1,000 of standard rate goods into the UK, you'd pay £200 of import VAT at the UK border. You would then get a certificate called a C79 certificate, which is in effect a receipt, and then you claim that VAT back in your VAT return. That's been done away with, which can only be good news. To be able to just self-account for the VAT and be able to recover it in the same VAT return, as long as you're a fully taxable business. And this is a result of us leaving the European Union, but it doesn't only apply to goods entering the UK from the European Union. It applies to all goods entering the UK from anywhere in the world. So if you're a trader that never actually traded with the European Union, you may have only ever traded with China or India, or countries outside, any other country outside the European Union, you're no longer going to have to, in most circumstances, pay VAT up front, which you're then going to have to wait to recover in your VAT return. So that can only be a good thing for cash flow purposes. Just a couple of caveats there. There is some exclusions. If you defer your customs declaration, sorry, let me just, before I get onto that, it's optional. By the way, you need to tell the person who's doing the customs declaration that you want to self-account for the VAT. And then there are some exclusions that if you defer your customs declarations, which you're allowed to do until the 1st of July 2021, as an easement of us leaving the European Union, then you have to use the postponed VAT accounting. I'm struggling to find any situation where a trader would opt to pay the VAT, then wait to claim it back in their VAT return. Maybe we can talk about that in the Q&A later, because maybe people do have situations where they prefer to do that. I'd love to hear the reasons why and educate myself a little bit on that as well. Okay, so there's also going to be another change, which is going to be basically the abolition of low value consignment relief. So at the moment, well, not at the moment, prior to the 1st of January, you could bring goods into the UK up to £135 free of customs duty and up to £15 free of VAT in a single consignment. That's no longer going to apply, and it doesn't apply anymore. So the move is going to be from import VAT to supply VAT. So I'll try and give a quick example of this now. If you went online and you purchased a shirt, for example, from a online shop retailer in Delhi, and that shirt was below £135 and below £15, you could bring that into the UK free of VAT and customs duty. If it was over that, because the supply and the sale took place outside of the UK, i.e. the customer, the UK customer, let's say in this situation, took ownership of that shirt in India, it'd be up to the UK customer to deal with any customs duty and VAT at the UK border. That is now shifting from import VAT to supply VAT. So the overseas seller, whether that be in India, China, Japan, anywhere, now is liable to account for UK VAT if the value of those goods that they're selling to a UK consumer or a UK business even is below £135. It's difficult to really understand how this is going to work practically. And there's been quite a lot of stuff in the media about this particular thing, where there's been some retailers who were in the European Union that were taking advantage of the long distance selling threshold that I mentioned prior, a few minutes ago, and now they're being told they've got to register for UK VAT and account for UK VAT if they are selling goods below £135. One thing I read, I think it was a week or so ago, was a Dutch seller of bicycle parts to UK individuals, and they've sold bicycle parts. They sell specialist bicycle parts, special bikes. I'm not a bike rider, so I'm not really too up on that. But and they were just charging Dutch VAT under the distance selling threshold because they're below the distance selling threshold. But because of this new legislation that came in on the 1st of January, they can't sell to a UK individual without registering for UK VAT because the sale of their bicycle parts are below £135. So they've now, and this was probably maybe the media making more out of this than it is, like they usually do, but they've now, what I read was that this Dutch seller of bicycle parts has put a notice up on their website saying they refuse to sell to UK individuals because they don't want to have to pay UK VAT and register for it. So, and also just to give you another real life example of a client I've been speaking to recently. So one of our clients, he's retired and he just wants to earn a bit of extra income to supplement his pension, and he sells herbal remedies to UK consumers. He's in the UK, his customers are in the UK. He purchases the herbal remedies from a free zone in Japan, and they are sent directly from the free zone in Japan to his UK customers. And he's been able to do this without registering for VAT because his UK turnover is below £85,000. And he's also been able to do it without having to account for any duty because the remedies are below £135 in each single consignment, and they're also below £15 in value. But now his whole business model has completely changed, and he's actually thinking of not carrying on doing this because now the Hong Kong seller to him can only not charge UK VAT if he is VAT registered. Because if he's VAT registered, then there's a new mechanism to account for VAT under a reverse charge if the goods are under £135. So, I mean, this isn't straightforward. Nothing in life really is, to be honest. But I'm just trying to give a flavour of how these rules are affecting lots of different businesses. And it's a personal opinion, but I don't think that the UK government have really thought this one through. But I think you'll all agree with COVID and Brexit, there's a lot of things they didn't really think all the way through. So some of the key action points, this slide here has been knocking around for about 4 years now. I've changed it and updated it. It's not 4 years old in that sense, but I've been doing presentations about Brexit for that long, and this is the key action points, and they're not really action points anymore because they're not even things to think about. They're things you actually really need to do because, as I said, we've gone live. It's the 13th of January. So map out supply chains. Pinpoint where you're purchasing goods from, who you're selling to, whether they're private individuals, whether they're businesses, whether they're VAT registered. Look at where the suppliers and customers located. Look at your margins. What impact does it have? If customs duty now becomes payable, then when you're trading with other EU countries, that's going to affect your margins. You need to up your prices. I've put in there on the slide unlikely because of our Christmas Eve deal, but then go back to my example of the Australians that sell jar into Germany and then from Germany to the UK and the rules of origin. Consider a VAT registration in another European Union country. We're going to be getting lots of VAT registrations in the UK because EU suppliers are going to have to register VAT in the UK, and I suppose that will be reciprocated. There's going to be lots of UK businesses registering for VAT in the EU. Your goods are then in free circulation, and you can continue to benefit from the current EU arrangements. Think about your contractual terms. Can your EU customer become the importer into the EU? That saves you as a UK seller a lot of headache having to appoint a overseas advisor to register you for VAT and file VAT returns and deal with customs declarations. And I'm sure you've all heard about the EORI number. Boris Johnson said it himself in Parliament the other day. I won't do my Boris Johnson impression, but he was saying that, we're ready to leave the European Union. People will need to get their EORI numbers and blah, blah, blah. And I thought, does anyone know what he's talking about? I do because I'm a VAT specialist, but by EORI, he means Economic Operator Registration and Identification Number. And you need that in order to import and export from the UK. That's essential. Your goods won't get cleared into the UK from the European Union or anywhere without it. And those of you that are trading internationally, or I know we've got other professional people on the call as well that are advising their clients. I'm sure that you're telling your clients they need to have that number, and I'm sure that they do. There's also the National Export Scheme. When you export from the UK, this needs to be recorded on the National Export Scheme to declare your export goods. Speak with your freight forwarders and your customs agents. These guys are crucial at the moment, because when you're trading with the EU, there's now new documentation, new forms that need to be filled in. And getting those forms correct is essential because it determines whether your goods came from Australia or Germany, or whether you're going to self-account for VAT. Also, I've mentioned call-off stock and triangulation. I could do a whole session and would be here all night if I started talking about what call-off stock and triangulation is. But if you know what call-off stock and triangulation is, then you will know that what I'm talking about, and you can no longer use it. So there's not really much point in talking about it, to be honest, because we're no longer part of the European Union, so it can't be a simplification that can be used. There's also the Common Transit Convention. This is more of a customs thing, but it's where you can move goods through different jurisdictions and pay the duties and taxes at the final destination. Right, so now I'm going to move on to services. So as I said, I'm just checking how I'm doing for time. I think I'm okay. Yeah, we've still got plenty of time, I think. So as I said, people often mix up the rules with services and goods. With VAT rules, you have to look specifically at goods and services. Services have a whole different set of rules. So with services, generally, there's not going to be too many changes, but there are going to be significant ones. Sorry, there's not going to be too many changes, but the ones that are, the changes that there are going to be significant. So generally, a business-to-business supply of services from the UK will continue to be outside the scope of UK VAT, whether that's supplied to EU or non-EU customers. As the basic rule for services is that the place of supply, i.e. the place where VAT is due, is where the customer belongs. So, and that's usually accounted for in the EU under what's called the reverse charge if it's a business customer. And if it's outside the EU, then it depends with whether that jurisdiction that you're selling to has a goods and services tax system and how that operates. There are exceptions. The exceptions are quite important. Land-related services, performance, work on goods, and I've seen a couple of the questions. Electronically supplied services, internet services. They're all the exceptions to that basic rule. And also many business-to-consumer services in the European Union at the moment. I think while HMRC either change the law or work out what the policy is, a lot of the professional services that were subject to VAT are now not. For example, if you're an accountant or a tax advisor like myself, and you build a customer on the 1st of December, and it was a private individual in, let's say, France, you would have charged UK VAT because the place of supply would have been the UK, because the place of supply, if you're providing services to a consumer, is where the supply belongs. However, the VAT legislation does set out a load of services which are not subject to VAT if that person is outside of the European Union. And now everyone is outside of the UK because we now stand alone. Everyone effectively is a third country with regards to the UK. It's not UK, EU, and then outside of that, it's just everything is outside the UK. So at the moment, professional services, even when provided to private consumers, is outside the scope of UK VAT with regards to services. So again, action points, supply chain mapping, similar to goods. Look at what you're providing and who you're providing it to. Again, does it make sense to alter your supply chain? Do you need a VAT registration in another country? And this fourth point here, electronically supplied services, which as I said, I saw some pre-submitted questions. So this is an exception to the rule with regards to services, where the place of supply shifts from where the supplier belongs to where the customer belongs with regards to electronically supplied services, i.e. downloads, internet provided services. And back in 2017, it might have been 2015, there was something that was created called the mini one-stop shop, which some of you may be familiar with, where you have a one single EU-wide VAT return where you can account for VAT on all of your suppliers. to individual customers throughout the European Union. As a result of us leaving the European Union, we can no longer use the mini one-stop shop. So what that means is, in theory, that if you supply electronically supplied services to any consumers within the European Union, you have to register for VAT and account for VAT in each of those countries. However, what you can do is apply for something called the non-union scheme via a European Union country. Lubbock Fine are part of an international network called Russell Bedford International, we're the founders of Russell Bedford International, and I think we're probably the biggest firm in the network. So we've got, in effect, offices all over the world in our network, and we've been sending our clients onto our colleagues in Ireland. One, mainly because they're good, and two, also for obvious reasons, for the language, because people in Ireland speak English as a first language. Holland's also good because you rarely meet a Dutch person who can't speak English. If anyone knows any Dutch people that don't speak English, please bring it up in the Q&A and let me know. So also, there's a big change with regards to financial services, and this is going to have this is a big boost. And Rishi Sunak actually announced this in Parliament about an £800 million VAT boost to the export of financial services. So whereas partly exempt businesses that supplied, sale of shares, or whether it's a financial intermediary to customers in the European Union, the VAT is blocked on recovery. That's now been removed. It's still blocked if you're providing the services in the UK. It's still exempt from VAT. But yeah, so VAT went all the way to, well, Rishi Sunak was talking about it in Parliament a few weeks ago. So that's good news. That's good news. So if you're partly exempt business and provide financial services to customers in the European Union, you could find a big boost to your VAT recovery on your costs. Yeah, and then there's the last point there is about the reverse charge. I think that's probably an old point, to be honest, about when there was a bit of uncertainty about who would account for VAT under the reverse charge, and if things will still be subject to the reverse charge. I think largely speaking, things that, when I say reverse charge, I mean that's where the customer accounts for the VAT in the European Union country, or the UK customer, the UK recipient does. Yeah, so I think that's going to remain as it is with regards to reverse charging. So a couple of other things with regards to leaving the European Union, and this is just more general now, moving away from specifically goods or services. So as members of the European Union, we were able to make refunds of VAT incurred in other European Union countries quite easily through HMRC's online portal. It's where you don't have an establishment near you country, but you might incur costs there, for example, at a trade fair, or you might have staff that go and stay in France for a week to clients, and they might incur hotel bills and subsistence. You can no longer use that system. So in order to recover, in that example, the French VAT, you're going to have to get a French specialist to complete a refund application in French, as opposed to doing it in English on your HMRC portal. So that's going to probably make a lot of VAT incurred across the UK, across the EU. It's probably not going to be worth claiming it, depending on the amount. I mentioned this before, I'm repeating myself a bit here, but no triangulation, no call off stock. I did mention that earlier. There's also simplifications with regards to supplying and installing goods. That's no longer going to be available. And now some good news. Or it might be bad news for some of you, but we no longer need to file EC sales lists because we're not part of the European Union. And the reason I say that might be bad news for some of you, because there might be some accountants on this webinar that maybe get a nice little fee from their clients for filing their EC sales list, but that's no longer going to be required. The same goes for Intrastat. If you're aware of that, that's when you sell goods and buy goods over a certain value, you have to fill a supplementary declaration in. Although with regards to goods arriving in the UK, if it's in excess of 1.5 million in a year, you still need to do that until 2021. It's still required throughout 2021, so it won't be till the end of 2021 that Intrastat is completely gone. You're still going to have to fill it out for goods coming into the UK from the European Union. Okay, so coming to the end now. Northern Ireland, as I'm sure that a lot of you are aware from, because it's been one of the main sticking points with regards to getting a deal, it's part of the UK and it's part of the UK VAT system. But at the moment, for the foreseeable future, that's going to be with regards to VAT for services only. For goods and customs, it's still going to be part of the EU effectively. It will still need to abide, businesses in Northern Ireland will still need to abide by European Union directives and regulations with regards to goods, and also be bound by decisions made by the European Courts of Justice. It's quite difficult to talk about Northern Ireland because it's quite complex and it's also ever changing. And I'll tell you now that when I woke up this morning, I saw a update with regards to Northern Ireland and the movement of goods moving from Northern Ireland into the EU from Great Britain, and how import VAT into Northern Ireland is accounted for and whether or not it can be recovered. And it came through on this morning's update, and I haven't had a chance to study it. So that's what I mean when it say it's ever changing. And if I'd had the chance today, I would have studied it and changed the slides. But I think my marketing colleague and maybe CAT8 would have been annoyed with me if I decided to change my slides at the last minute. So it's, there's very specific rules. There's going to be some form of import VAT when goods enter Northern Ireland from Great Britain. Great Britain being England, Wales and Scotland. Northern Irish businesses will distinguish themselves when trading with the EU by putting a XI in front of their UK VAT number. Then there's also, in a lot of circumstances, normal VAT rules will apply when you're selling goods from the UK to Northern Ireland. And then there's also specific rules about moving your own goods to Northern Ireland and whether or not you're in a VAT group. I think the biggest worry, obviously, which I think is quite obvious, is that there needs to be some tough and quite specific rules to Northern Ireland, because it's an easy way for you to move goods from the UK into the European Union, because you'd sell them to Northern Ireland and you'd move them straight across the border, because there isn't a border with regards to goods between Ireland and Northern Ireland. And same the other way around, if you wanted to funnel goods into the Great Britain via Ireland, which is a European Union country. So I'm not going to dwell on Northern Ireland too much, because as I said, they're quite specific rules. It will depend on exactly what you're doing, and I think, yeah, that brings me to the end of VAT and Brexit in 2021. So I think we'll open it up for questions. Ramit?
Yep. Thank you, Jaspal. Thank you very much for the presentation. It's, as we know, it's very complicated and all these rules are changing at a very fast pace. If you can stop sharing, I'll go to my slides.
Let me work.
Okay. Right. So before we just go into the question and answer session, if I can introduce the other two panelists, Pankaj Shah of Lubbock Fine and Richard Staunton of Gerald Edelman, who will be joining Jazz to answer any questions. Just give a quick background to Pankaj. Pankaj joined Lubbock Fine in 1977 and was admitted as a partner in 1985. Having been with the firm for 43 years, he will transition from being a senior partner to a senior consultant with the firm, which is an important stage in his retirement plans, as this will allow him to continue working with his long-standing clients and at the same time allowing for an orderly succession of client affairs. Over the years, Pankaj has developed a sizable portfolio of personal and business clients across most disciplines based in the UK and overseas, advising and supporting them in all financial aspects. He has particular expertise in dealing with the management and taxation of real estate investments in the UK by overseas investors and provides a comprehensive service to these clients, including advising on tax issues, dealing with all compliance matter and regular financial reporting. Pankaj's interests also include charitable work for various organizations and charities. The other panelist is Richard Staunton. Richard is a VAT partner at Gerald Edelman. He actually states that he loves VAT and he actually admits it. He advises his clients on all aspects of VAT and other indirect taxes, as well as providing VAT health check. He is also experienced in preparing for tribunals and more recently in settling matters through alternative dispute resolution. After completing his degree in history and social psychology, Richard went on to become a higher executive officer with the Her Majesty's Customs and Excise, and subsequently worked both in private practice, specialist VAT consultancies, and in industry for many years. He joined Gerald Edelman as a partner in 2018, heads the firm's VAT department. He has run over 50 marathons. So without taking more time, if I may ask Shandip, if you can ask the first question, please.
Sure. Okay, so I suspect a lot of these questions are going for you, Jazz, in terms of the VAT, but I'm going to start with the first one. So this is from someone in our panel, someone in the audience. I manufacture in China, sell in the UK and EU. Before, I was not charging VAT or paying duty. What is our current position?
So the goods are being purchased from China,
correct,
into the UK and EU,
mm-hmm.
And then we're saying no VAT and duty. I imagine if there's no VAT and duty, then it must be, if there's no VAT, it must be something which is zero rated for VAT purposes. I can't see why no VAT would be, import VAT would be charged. Maybe children's clothing or food, something that qualifies.
So would the current position be the same?
The current position will be, yes, it will be the same because it's coming. The goods are coming from China. The goods are coming from China into the UK. Then that movement hasn't changed.
Just by the sale from, I think, there's a sale into Europe as well from UK, wasn't there? Wasn't that the second part of the question?
That's a separate question. But they sell both in the UK and in the EU.
Okay, so when do the goods come into the UK and then go to the EU, or do they go? I
suspect so. Yeah, I suspect so.
Coming in from China to the UK, as I said, I'm not sure what the goods are. But if there's no VAT and duty, then I imagine it must be something that's tariff-free and also zero rated for VAT. But if you're now selling from the UK into the EU, then you're moving goods. It depends who's going to be the importer into the EU from the UK. Does the UK company sell, UK entities sell from the UK to the European Union, and the customer in the European Union acts as the importer? I imagine it's a business-to-business transaction. Or if the EU customer is the importer, then they will deal with the declarations and the import VAT into the EU. If the UK company is selling into the EU, then they will need to register for VAT somewhere in the EU to clear the goods into the EU.
Okay.
Richard, do you have anything to add to that?
Actually, when you were talking about your slides, one thing that I've been mentioning to my clients, I'm sure you have as well, is that there's a bit of a worry about all these changes, but actually the VAT and the duty, if you set your systems up correctly, they shouldn't change. So, for example, if you had goods that were standard rated in the UK and you sold them into Europe before 1st of January, you would charge UK VAT. You would charge UK VAT to the final consumer. After 31st of December, you would zero rate it. And if you kept your costs the same, if you kept your price the same, the VAT would then be due when it crossed border and was imported. And so if you paid that VAT on behalf of your customer, actually the amount of VAT that has been paid over is the same. It's just that it would be paid over in the UK. It would be paid on import into the EU. This particular question is a little bit different because I think you've quite rightly probably established that this is zero rated goods in the UK, but it might not be zero rated in Europe. So it might be that even though we zero rated it before and we zero rated before because maybe it was children's clothes, now we're zero rating it because it's an export. It could be when it goes into Europe, it will attract VAT on the border because maybe that European country has a different rate of VAT for children's clothes. But I'm sure it'd be a low rate. That's the only thing I really add. But I think overall, the message is that it's really about people producing the correct declarations, and if we do that properly, there shouldn't be a greater tax burden on supplying goods in and out of Europe. It just will fall in a different place, probably.
Okay.
Can I just follow on from that? I think there's a question which just it's similar, but it talks about can you please clarify the VAT requirements for UK e-commerce businesses who want to sell to the EU? All the goods are not manufactured in the UK, but mainly from the Far East. So I think it's similar, but it's depends on. I think
you'd have if it's e-commerce, I selling goods online. You've got to follow the goods. Did they come into? Are they in the UK? If they've come into the UK first to then be sold online, then you probably won't get a tariff-free because of the rules of origin that I was speaking about. With regards to e-commerce sales online, then you need to register in the European Union countries that you're selling to, because there's a zero threshold because you're a non-established. You're in the UK, you're a non-established business in the European Union, so you need to register for and account for VAT in those countries. That's going to be, I think, eased as we go throughout this year, because there's going to be something new called the one-stop shop, where you'll be able to account for VAT in one single European Union jurisdiction. But as things stand at the moment, if you're selling goods to private individuals in the European Union, you need to register for and account for VAT in those countries.
Jazz, just as a point, if you say were selling within the EU and there were, say, 5 countries or 10 countries you were selling to, and if you did a transaction with, say, Germany, as an example, and then Germany distributed it to the rest of the countries, would it just be the German VAT required?
Yeah, I mean, if you sold to a German company from the UK, then the German company will benefit from the distance selling threshold, for example, because it's still in the European Union. So it would be able to sell from Germany to other European individuals in other European Union countries, because you've effectively cleared the goods into the European Union and they're in free circulation.
Yeah, I mean, so isn't it one of the possible answers?
Nirmal?
Rumit, can I just interject before Nirmal? The first question I asked, the gentleman's just messaged on the chat. So he said, no VAT charged to EU customers. It's not a zero rated, but we were not charging VAT on EU customers. The first question I asked. So I don't know whether that clarifies matters or makes it even worse.
I think, as Jaspal said, we think it's probably a zero-rated supply, so they wouldn't be charging VAT to their customers. Children's clothes or food or something that's in the zero-rate schedule.
Rumit, can we ask Ravi to unmute and maybe ask that question?
No, just chat to him and just ask him the question. Yeah, Nirmal.
Yeah,
if you can, please.
Yeah. So the question I have is, what is the treatment of digital services sold to a business in Ireland, which are VAT registered?
Thankfully, that's the sort of stuff that won't change. It'll be subject to the reverse charge in in Ireland, because it'll be a sale from the UK of digital services, as long as they're used in Ireland as well, so we don't invoke any of the use and enjoyment provisions in the VAT legislation, and it'll be reverse chargeable in Ireland. The complications come when it's B2C, i.e. business to consumer. B2B, it'll be reverse chargeable in Ireland.
Okay, just to follow on from that, where do things like ebooks, I think you may have covered it, but I just want to ask, just so it is covered. Well, where does things like ebooks, music downloads, software downloads fit? How do the rules of origin work over here?
They're services, they're not goods, so the rules of origin won't apply there. The rules of origin only that I was referring to in the trade agreement from Christmas Eve applies to goods. Anything done online, ebooks, downloads, music, digital downloads, they're services. They have a different set of rules.
Okay.
Which sort of refers back to what I was saying, that it's very easy to get. So, you know, some people might think it's obvious, this is a good and this is a service, but sometimes it can get confusing, because you used to buy a CD from HMV 10 years ago and now you download it. You used to buy a good and now it's a service.
Yeah.
And can I just follow on up from that? What about app subscription services? How does the VAT work on those?
Well, a lot of them are free, aren't they? So a lot of the time you don't have to worry too much about app downloads, because they make their money in other ways. If you was going to charge for that, it's an electronically supplied service. So if it's B2C, it will follow those rules. If it's B2B, then it would be reverse chargeable if in the EU. And then again, I don't want to get bogged down in too much complexities, but there's also use and enjoyment provisions, i.e. where are you using the services, and if is that in the UK, EU, or somewhere else?
Sure.
Yeah.
Okay.
So, yeah.
Sandeep, you take the next question, and then we'll go back to Ravi at a later point.
Sure. Okay. So, Richard, question for you. So, I'm a UK VAT registered business, sells VATable goods to company in Dubai, but the goods are sent directly from the supplier in Hong Kong. Will this be subject to UK VAT?
And in fact, Jaspal did mention, I think, fairly early on, when he was given some words of wisdom from an old boss, I think, or where, what, when, and how, or something. So it's completely outside the scope of UK VAT. The goods aren't here when sold, so there's no UK VAT at all. You might want to think about VAT in the country of destination and what happens, because I think is that United Arab Emirates type state. Did you say Dubai? Because I think they bought in a VAT system. I know that there's a number of those Gulf states that were bringing the VAT system, and I think some delayed it and some didn't. And I know it was quite narrow in scope, but I'd be worried about VAT when the goods went into that country, but that wouldn't be anything to do with UK. You wouldn't be charging VAT on your invoice.
Yeah,
that's
so
nice.
It's good,
That's
good news. It's good news for that the person who put that question.
Brexit hasn't changed either. Brexit hasn't changed anything there.
Excellent.
Okay.
Yeah. Question. What are the rules of freight forwarding when shipment come in from UK customers? Come in for UK customers from EU that do charge VAT.
Are we talking about transport services?
Yeah, freight forwarders.
Right. With transport services, you firstly look at the basic rule, which is where's the customer? Is it a business customer, or is it a private consumer? And then where is that person located? So, for example, if you provided that to somebody in France, it would be reverse chargeable in France. There's always been a specific rule on if the transportation takes wholly outside of the EU. And I noticed the other day, looking at some of the updates to HMRC's guidance, that now just says wholly outside the UK. So if the transportation took place wholly outside of the UK, then it wouldn't be subject to UK VAT. But other than that, you'd revert to the basic rules. You've got to know who the customer is and whether they're in business or a private individual and what jurisdiction they're located in.
Jazz, you may have covered this thing in your presentation, but I'll just ask again, just to clarify.
Yep.
It's very similar to your tea, coffee client. They sell tea and coffee, and basically they have a production of tea infusion sticks and coffee pods, which are in the EU, one of the EU countries. They sell and distribute to EU clients. So the assumption is there will be no tariff or VAT. What happens in the UK? Presumably no VAT there as well.
So again, it depends who the importer is into the UK, and then whether it's a private individual or a business.
Mm-hmm.
Let's assume that they're selling this from the EU into the UK. If the UK and its business, if the UK customer is a VAT registered business, then they will they'll account for the import VAT via self-accounting, and they'll make the import declaration for customs purposes. And if the goods originated in the European Union, I'm not a customs expert, but I imagine that it will be zero tariffs.
Okay. All right, thank you.
Okay.
Sandip?
Yeah. Okay, so a question for Richard. Retailer, shopkeeper, how do we treat sales now to an EU resident? Is it the same as we've done in the past to the rest of the world, i.e. probably high value goods where they'll give the VAT reclaim certificate, etc.?
No, this is a bit of bad news. I think we're going good cop, bad cop at the moment. The VAT 407s have gone, so that's history now.
Right.
So there's no such thing as retail exports. So and again, pre 1st of January, you could buy goods, and if you didn't belong in the EU, you came to the UK on holiday and you bought high value goods, and you could show that you took them outside of the EU within 3 months, I think it was. You did, and you filled out a form, then you get that VAT back less a bit of commission. And I guess it would be quite a bit of that back if it was a Bang & Olufsen stereo, because they're quite expensive things, aren't they? But that's gone, and that's gone. It's one of those weird things, and I think myself and Jaspal have been here long enough to know that, you know, with VAT you can have the carpet pulled from underneath you that list the rules on listed buildings and approved alterations. I knew someone who that's all they ever did, and in the budget one day they announced that it was going. I know people who do VAT 407s who are in the machinery of doing or looking after VAT 407s. And when I worked for retail, I introduced a VAT 407 system into the POS, into the till system, with a company. But those companies it's no longer of any use because it's gone. And I don't know why. My initial reaction, my initial thought was because you could get people from the Republic coming over to Northern Ireland buying stuff, people from France hopping over to the UK buying stuff and getting it VAT free. But I think I've heard, and I don't know whether Jaspal, you know any different, but I think I heard there was a law that we would have broken if we carried on using the VAT 407 system. So yeah. I don't know why it's gone, but I know it's gone.
Okay. Nirmal?
Yeah, a question here. How do you account for purchase from the EU for goods which are non-VAT? Do you use the VAT code for EU purchase as before, so as to report it in as EC purchase on your VAT 100?
I think that if you're importing goods into the UK that aren't subject to VAT, then you'd report it on the VAT return as 0 in box 1 because there's no import VAT, 0 in box 4 because there's no VAT to claim, and it'll just go into box 7 as a purchase.
Mm-hmm. Okay.
I'm not sure what's happening with boxes 8 and 9 because they're European boxes, but because Northern Ireland is still in the single market, I'm not sure whether they're going to to stay there for the purposes of people who are trading in and out of Northern Ireland. But
Yeah,
I don't know.
I think they're going to refer. I think they're going to just refer to Northern Ireland. Do you?
Richard,
I was
just coming to that as the next question.
Yeah. Okay, that's good.
Right, you've preempted the question.
Absolutely.
Just maybe I pass this on to Richard. Richard is a company is importing from the USA, pays duty on importing into the UK. Previously, those goods sold into the EU did not attract any further duties or tariffs. Is it correct that those goods will not attract any further tariff duty, resulting in a double payment of duty? So same would continue carrying on.
I'm a bit of I'm exactly like Jaspal here as well, that I'm not a duty specialist. I'm a VAT specialist.
Okay. Sorry.
But no, but I'm not gonna stop there because that's unfair. What I think is happening is that duty will apply when it comes into the UK, but because then it will go out of the UK into the EU, it will be re-exported again. So you'll have some sort of a duty relief, inward processing relief, something like that, temporary import relief, that then you will basically either not pay the duty when it comes in or pay the duty and get it refunded when it goes back out into the EU. But what will happen then is that duty will then be paid when it crosses the border into the EU. So kind of going back to what I said originally, that the tax won't change, the procedures will change, and actually we should be in a fairly nil net tax position at the end of it. But customs experts and freight forwarders and those sort of people, they'll be charging more for doing forms because there'll be more forms. So where accountants will be doing less work, VC sales list, as Jaspal said, freight forwarders and shipping agents will be doing a lot more work, and I'm sure will be charging accordingly for it. I suspect in a few months' time or a year or two, it will just become routine, and actually costs will go down, and I think the worries will go down, and we'll kind of go, what was all the worry about? I think the first few months, and 6 months' time when the new IOSS thing comes in Europe, that's going to simplify things as well. That's going to become simpler, but I think the first few months is going to be a bit of a worry and a bit of a complication. But to be honest, as we get used to it, it will become a lot simpler, and I suspect costs won't go up that much. I don't know if you've got anything to add, Jaspal, about the duty bit.
No, not really, Richard. Yeah, I think I agree with you on that. Yeah, I think we need to let the dust settle. And we need to get through COVID. I know it's not related to this, but we need to get through that and get back to our new whatever the new normality is, and the economy running and everything else, and then we can deal with all these issues there as well at the same time.
And of course, we've got the domestic reverse charge for construction services as well coming in apparently in March.
Can't wait for that.
Shandip?
All right. So a question to Jazz. If I dispatch goods, brackets perfumes, from Spain to Germany, I am a UK client. Do I charge VAT to the German customer? It's a B2B sale.
So we've got goods going from Germany to France. Did you say?
No.
Sorry.
Spain.
Spain doesn't really
no,
matter.
goods going from Spain to Germany.
Okay, yeah, so it doesn't matter. So it's B2B. And we're a UK company. It goes back to where, who, why, and everything else, and what Richard said as well, and echoed that the goods don't enter or leave the UK. But I would just say that we need to tread carefully there, because perfume's excise goods. It's like selling cigarettes and alcohol. So you need to make sure that you're up to speed and you're covered all on excise duties. But the goods don't enter or leave the UK. So if it's a UK company doing that, there's no UK VAT. There might be an opportunity to register for VAT in Germany. They're going to be making zero-rated sales B2B from Germany to Spain. It might be advantageous to do that because zero-rated sales will get any German VAT back if they're incurring costs, which I'm sure they are, because where are they buying the perfume from?
Spain.
Spain.
Yeah. So they buy it in Spain and sell it from Spain to Germany.
Yeah.
Yeah. So I think you need a Spanish VAT registration.
They probably had triangulation before. That's probably what happened. Now I have to register.
Yeah.
Oh yeah, of course. I didn't think of that. Yeah, the UK company would have been. Yeah. being the intermediary.
And following up from that, there's another question very similar. Somebody selling goods from the UK to the EU, either B2B or B2C, via courier like UPS or DPD. Who collects the VAT and how is this done? Would the courier charge the end customer?
I think it depends on the Incoterms of when does ownership take place, and is it who's the importer into the EU, basically. The courier is just the courier. They're providing a transport service, unless they're not involved in the supply of delivered goods. They're involved in they're providing transport services. Who is the importer into the EU? Is it the UK company or is it the customer?
Yeah.
And then from there, once you know the answer to that, then the next stage will be, if it's a UK company, it needs to register for VAT in the EU country and clear the goods in and charge domestic VAT. That's why a lot of supply chains probably will be altered. I know a lot of our clients are doing that, where they're changing the supply chain, where the EU customer is the importer into the EU.
Yeah, and if it's an individual customer in the EU buying the goods from a UK company.
Right. Okay. So if it's an individual customer, then the UK company may have to register for that in the EU if it's the importer. It depends on the terms of the contract. I imagine it's over. I can't remember. It's £135, whatever the equivalent of that is in euros. Customs duty threshold and the VAT low value consignment relief, which still applies in the EU until July. But all that would be short lived anyway, because this £135 I was talking about earlier, that's all coming to the EU as well.
Right.
150 euros or whatever it is.
Yeah.
I can't remember, but
yeah, it is 150. You're right. Jaspal.
Nirmal?
Yeah.
Jaspal, just to add to this thing, just to clarify something, Jaspal, this is where the purchase is being made by an individual from a UK company. But if they were doing it through an online marketplace, say, for example, Amazon or eBay, then presumably it would be eBay or Amazon that would be responsible for the VAT.
That's a really interesting question, actually, and thanks Pankaj for bringing that up, because I didn't cover that in my slide. If an online marketplace is involved, that changes who accounts for the VAT. The rules are quite complex because it depends if the goods are in the UK or if they're being sent from outside the UK. But in a lot of circumstances, depending on the exact nature of the supply, yes, you're right, the online marketplace either becomes liable or in a lot of cases becomes joint and severally liable. And I think there's going to be just generally more of a move towards making online marketplaces liable, not just with goods, with services as well.
And I think you're right, Jaspal, and there's a really good point to bring up. And I think that's the point of this legislation. And I don't think they really care about someone who sells the odd widget into the UK. I think that they want the likes of Amazon to actually account for VAT on local sales. And I think that's the whole purpose for these for this lower, for the under £135 limit.
Okay. Nirmal, have you got any other questions or?
Just one following on. Yeah. So, Rimit, this was following on from your question, and I'm not sure it differs, but I just wanted to get a clarification on it. So, this was UK business selling to an EU end user. So, this is a B2C, where the goods are zero rated now. The person who's the question is, does the end user pay the VAT in their country?
But the end user is an individual, and it's now a non-UK country. Doesn't matter if it's in the EU or not. And we're saying that the goods are zero rated. Again, it goes back down to who's the importer into the EU. Is it above or below £135? And if it's zero rated in the UK, that doesn't necessarily mean it will be in the EU, as Richard was saying. I think, well, like for example, we have 0 rate on food. Most of the other European Union countries don't. They have 5%.
So I think the question, Jazz, was that does that mean that whatever goods are going there, but when they're 0 rated from here, when they're sold over there to the individuals, is there a VAT that they pay for the equivalent? So let's say if there was a sandwich going from the UK to the EU, which was 0 rated, when it was purchased in the EU,
right? Okay.
Do they pay the local VAT there? I think that's the question.
Yeah, they would do. Yeah, depending
yeah.
on whatever the liability is. I think we're getting confused. Or maybe it's just me getting confused between 0 rating of export of goods and 0 rating of the actual liability of the goods. So out of the UK, export 0 rate because it's an export. It doesn't matter what the goods are.
Yeah.
But if we're then talking about the goods arriving in that country, depending on what they are, they will be a domestic sale. Yes.
Sure.
If it's the UK company that's imported, then it'll make a register for VAT and make a domestic sale if it's subject to VAT. If it's a private individual, well, it would have to be a business that imported it into the EU, then sold it on.
So I'm wondering whether the question is really about who's paying for it. And I'm sure you've had the same thing, that I've had people who send in these goods not charging VAT, and then the customer getting a huge VAT bill from the freight forwarder before they can actually receive the goods when it's cross-border. And then the customer just said, I don't want it, and returned it back. And I guess that's in your terms and conditions, you know. And I was forward, if you were selling standard rated goods in the UK, you would make sure somehow you were swallowing the VAT when it crossed border and keeping your prices the same. But that's all down to terms and conditions, isn't it? It's not really. It's you know, tax will have to be paid when it crosses the border, and it's just a term of who pays for it. It's down to the contractual arrangement.
Yeah.
Okay.
Sandeep, I'm just going to unmute Ravi.
Yeah.
And take this as the last question because we're coming up to the time limit. I don't think we've got that many.
And there's no more questions anyway.
Okay.
So.
Ravi, do you want to just clarify your question?
Yeah, thank you very much for unmuting. Very much appreciate all the information given. Just to clarify, the process we have at the moment is we import goods from China. Products are manufactured in China to UK, and we pay the duty there. Then some of the goods goes to the B2B customers in EU or B2C customers. If it's B2C customers, we charge VAT, and if it's B2B, we don't, because if we have the VAT registration of the end customer. If the process continues as it is now, my understanding is if we export it to EU after 1st of January, either the customer or we have to pay duty. In that case, we are paid duty in UK as well as duty in whichever the country is going to, if we are the importer. Is that a way around? Richard mentioned something interesting. He said, if we export, we may be able to get export duty relief, unless I misunderstood that.
You didn't misunderstand, and I'm at the boundaries of the territory of my knowledge in that area. But yes, I think that you shouldn't be paying duty twice. So if you've paid it coming in and you can prove that it goes out of the UK, there should be a way of you being able to suspend or recover that duty.
Right. So that means on each country, whether it's Germany, France, or Ireland, I need to get registered as an importer or go as a one-stop property, as you recommended before.
Yeah, for B2C, I'd say that's right, isn't it, Richard? Because whereas at the moment you would have sold.
Jaspal, can you speak up, please?
Sorry, where at the moment you would have sold B2B, as you said, intra-community supply from UK to EU. When you sold B2C, you said you charge VAT. I assume you mean UK VAT.
Correct. Yeah.
Up to the distance selling threshold in that country, but the distance selling threshold no longer is available. So there would be a liability to account for VAT, bring a VAT to account in that country for the B2C sales.
I think your business is going to be unfortunately one of the most affected by leaving, because you just would have paid the duty when it came in,
Correct.
built it into your selling price, charge VAT to your customers who are if they were consumers, and reverse charge if they were business customers. And it would have been quite, did the EC sales list, all quite straightforward. And yeah, as Jazz said, it's not as simple as that anymore. You've got duty that you probably need to suspend, so you need to get someone who knows how to do that, a duty expert, maybe a freight forwarder who would know how to do that. It's just a procedure. It's nothing too complicated, but it's a procedure that an expert would know. And then B2B and B2C, you're going to have to work out who's the importer of record. And I would suspect that if you're doing it to B2B, your customer would be the importer of record, so that they would pay the VAT and claim it back. If it's B2C, you might have to think about who pays that VAT when it crosses border, and whether you register in that country, or indeed, if you set up another warehouse in somewhere like Netherlands and stick all the goods that are going to go into Europe into the Netherlands and do it out of there. And then you almost put in the...
Yeah, sorry to interrupt. Only problem is then we have to bear the warehouse cost and storage and infrastructure. Yeah, or the customer has to pay the duty. Those are two options.
No, and there's no point gilding the lily that some of these things are going to be an increased compliance cost or costs of extra warehouses, extra VAT registrations, extra forms. Shouldn't be any extra taxes. I think I've said a few times before, but other things that there are a lot of downsides, I'm afraid.
Okay, thank you.
Okay,
thank you very much.
Thank you very much. I think that's it. I think we've had all the questions. So before I close the session, on behalf of CAT8, I would really like to thank Jaspal Dhillon for a very clear presentation and answers on this very difficult topic. Actually, it's not easy. It's quite technical. Also, I'd like to thank Pankaj Shah and Richard Staunton for being part of the panel and obviously helping answer a lot of the questions. So thank you so much, all of you, for spending Wednesday evening doing this. Thank you again for that. Finally, as I said before, this webinar has been recorded and will be available to view on the CAT8 Facebook and YouTube pages in the coming days. It just takes us a couple of days to put that on. So rather than saying anything else, thank you all very much for joining. Stay safe, be alert, and save lives. Thank you very much. Good night. God bless you.
Thank you.
Thank you.